Everyone, get your life jackets ready. The stock market is officially sinking. I'm kidding. I'm kidding. It's gonna be fine. Don't worry about it. No, it is actually sinking. And today, the market went down. The lowest it's been in a month. And post market, it has gone down further. So let's look at the market calmly. We still have hope. We still have hope. So let's analyze and see what's in store for the market and what we could do when everything's turning down in the red against us. So let's analyze and let's know more. More coming up soon. Let's try one more time. So the first thing we look at is the top stories for the day. We'll then look at the S&P 500 technically and also look at the volatility index, which is also known as the VIX. We'll then look at the Nasdaq, the Dow Jones, the Russell 2000, look at crude oil and see how it's doing today. Also natural gas, gold, US dollar, crypto, and then we look at the world indexes and see how's the rest of the world performing. We'll then look at the top trending stocks, the top gainers, the top losers, and the high volume stocks for the day. Also touch on the top stocks now available at discount, and now everything's available at a discount and at a wholesale price. But don't get tempted, short selling is the answer. We'll also look at what's making 52-week highs and lows, and also the upcoming earnings in this coming week as well. So with all of this information, let's get started. If you feel something's really relevant to you through the entire section, skip forward, move to the section that's relevant to you. Otherwise, just enjoy the entire video, because at the end of it, you will leave with more information than you came in. So just stay on for the ride and let's get started. We'll start with the good old S&P 500, and as you can see, for the end of the day, it did tank 1.84%. And if you look at the 1.84% on the S&P 500 index, it is close to the previous low, which was the 24th of Jan 2022. Now, it is a significant drop, and it's almost like the biggest drops that we've seen, very close in comparison to the one that we've seen on the 11th of Feb and another one on the 17th of Feb. Now, what makes this drop special is the aftermarket and the drop that we've seen after that. So let's look at the S&P futures to see what I'm talking about. Oh, this looks scary. So brace yourself. This is some big events that are happening post-market. So if you look at post-market, now this is live S&P 500 at the time of this recording, and what you can see is that the end of the day, the market did close to the 4212 mark, and that's something that we were hoping that once it touches the previous low, you would see a bounce. What it has done now after market is that it's broken through it and made a new all-time low. Now, what does this mean? Where is the market heading to? I hope it's not going on a holiday, but it seems to be going to no man's land right down to the bottom. So what I could tell you now, the next support resistance that's coming up in very close sight. So before I do that, I just want to put up my support and resistances so that you get a better view of the market. So I'll put that on and then come back. Okay, so we've got the support and resistance lines on. It did not make any difference because the market's gone below the 200 moving period line, and it's also close to making the golden cross. Now, it's not a pure golden, you could call it a silver cross, but it's crossing the moving average line, which is the 200 moving average line with the 20 period moving average line. Now, what's the real golden cross is the 200 with the 50, and there's still time for that, but the market seems to be heading lower as we speak. So where is it heading? Like, what's the next ray of hope that we have now that the market's heading lower? So the next ray of hope that we can see is the 4,142 to 4,151. So around that range is where we foresee that the market may have some breathing room and just kind of take a breather over there and then decide if it has to go lower or no. So as we're looking at that, let's look at the weeklies and see how it's performing here. So on the weekly too, like the market's broken down the 50 period moving average line, which is a sign of a correction. And that's what you will see right now all over the news, is that the market is headed into a correction territory. And that's true. The market has broken down the 50 period moving average line and it's heading lower as we speak. Now, what is the respite, or what's a saving grace on the weekly time frame? Is again the 4146. So anything between the 4140 to 4150 is the next bit of support that we could see. So that's where the market's heading right now, and it's heading down full stream. And this is after market, but it's already down like almost 1% after market as we speak. So that's really doomsday, if you could call it. So now that we've looked at the S&P 500, what could be some possible ways that you could make money now? Because if you've got a very wholesome like portfolio or a diverse portfolio, it doesn't really make any sense now because everything's going to the ground. So a good way to counteract that is to start shorting some of your positions. So the way you could do it is either pick the S&P 500, pick the Nasdaq. Nasdaq's weaker too, and start shorting the Nasdaq and see. Start small. You could do either short an ETF Nasdaq, or if you would like, you could short an S&P or a Nasdaq futures as well, depending on how much you could afford. A micro mini is one option as well for the futures, or so you decide. It's a different video to talk about how to exactly short, but try shorting, and maybe that could help counterbalance your portfolio if you've got a lot of buy positions, long positions as well in your portfolio. So that's just a tip. Use it as your own discretion, but that could help you cover some of your losses if you're extremely long in a lot of stocks right now and they haven't sold yet. Now that we looked at the S&P, let's look at the VIX and see how that's performed. Now, this is the VIX, also known as the S&P 500 Volatility Index. And all that tells you is what is the panic in the market, or how high is the panic in the market. And the way you would read this chart is the higher the VIX number is heading to, the more there panic in the market. And the lower it is, the more stable it is, the less the panic in the market. And as you can see, now the VIX is actually like skyrocketing. It was high, and then it kind of like went down like yesterday, the 22nd. The 22nd was yesterday, and today it's gone up again. And if you can see, it is trending pretty high. Let's look at the weekly for VIX. Now, if you look at the weekly, it isn't the same as the March 2020 crash. So there's still respite. It's not going crazy. It's not saying that, oh, the world's ending. So we've seen a few more in October 2020, and we've seen a few more that had higher VIX numbers. So in terms of like panic, or like the panic index, you could call this as well, it isn't like the most dreadful. So there's still respite. There is a possibility that the market could reverse and change direction, and a lot of it would depend upon Russia and the Ukraine talks. So let's get into a sneak peek into what's happening in the Russia-Ukraine front to see if there is any positive respite or any hope in that direction as well. Now, it's common sense that there is going to be more correction in store until the Russia-Ukraine conflict gets resolved, or looks there is more hope in that direction. If the war is imminent, there is going to be further decline in the market. But there's an interesting article that I came across that I want to share with you, and this is from Yahoo Finance. And what it talks about is, now once the S&P 500 closes in correction territory, and that's the 50-period moving average line that we showed you on the weekly charts, where it did close below that, and it closed for the day below that, and that's a sign of correction. Now, once it moves into the correction territory like it did today, the market has a potential to recover from a correction within a week, in 2 weeks, and this is the percentage that it's turned positive in within a week, 2 weeks, 3 weeks. So there is hope in terms of like the market shifting direction. Now, it's also dependent on if the war happens or not. If the war happens, it's going to go down further. So that's again common sense. So if you look back in history, they looked at every time there was a correction as such, in the market. And they've looked at 1998. So they've actually done the study all the way back to 1928. So from 1928 to 2022, every time the market has gone into a correction, there have been times where the market has gone down further for a month. There have been times where the market has gone down for a year. That's like in 2008, where it went down for almost an entire year. But there are times where it's been able to recover. So that's just like, some sense of hope that I'm giving to you while we analyze the fundamentals. So I won't spend too much time on the fundamentals. Let's look at the Nasdaq and the other technicals and see how that they performed as well. So this is the Nasdaq on the daily. I'm just moving to the daily, and as you can tell, the Nasdaq did fall intraday, like almost close to 3%, but also it ended the day at a minus 2.6% down, and that's huge for the Nasdaq. So a lot of the technology stocks took a big hit today. A lot of the different good stocks, like the cream of the crop, have actually got hit. So it's really bad. Nasdaq's suffering a lot. And hopefully, when the market recovers, the growth stocks, which is powered by the Nasdaq, will move up the furthest. So yeah, that's the Nasdaq today. Very bad day for Nasdaq. And now let's look at Dow Jones and see how it's performed. So the Dow Jones did comparatively better compared to the Nasdaq, but it's at 1.38% down. Intraday, it seems to be very close to the previous low, which was about a month ago. But as you can tell, as I showed you in the S&P 500, it did go down further post market. So more downturn is expected. Like the market seems to have more downward potential in store for it. So yeah, bad news in terms of a lot of the indexes in the US, right? This is the Russell. So Russell has been less impacted, at least for the day. It's at minus 1.6%. Still pretty heavy, but less in comparison to the heavyweight Nasdaq. Now let's look at the crude oil futures, and this is live. As you can see, futures for crude oil has gone up 3%. And the reason why there is such a big rush to the upside for crude oil is because of the possibility of the energy sector, oil being suffering due to the war happening there. Russia is a major producer of oil, and Ukraine to a lesser extent, but also is a large producer for oil and natural gas. So that's one of the reasons why we've seen the oil prices heading up higher to another all-time high. So not the best or the safest times to invest in or purchase oil for your car, but you could also invest into the crude oil futures if you're looking for a long-term buy, because that's one of the safest havens right now with everything else falling down. Natural gas again, as I mentioned about crude oil, natural gas was in a live view, it's at 1.5% high, but it is also heading higher because there seems to be a scarcity with Europe heavily dependent on Ukraine and Russia to get a lot of their natural gas resources from. So yeah, natural gas is doing well. So as per the other energy stocks as well. And this is gold. So this is the gold futures. And as you can tell, the gold futures had a small slight correction. So for the last couple of days, there was a news article that I read that the gold seems to be overtaking Bitcoin in terms of the safe havens where people would keep their money in when the market corrects itself. So gold was doing pretty good for itself and did make an all-time high yesterday, but did correct itself a little bit today. So I still feel like there is more upward potential. A lot of the wealth is being transferred from the stocks to gold, and that's what we can see here. It's interesting to see how the cryptocurrencies are doing as well, so that's going to come up very soon. But before we do that, let's see how the US dollar is faring. So this is the US dollar index, and what you could tell from it is it seems to be trending a little bit higher, and the reason for that is the dollars with inflation rising and a lot of the various factors that seem to like put a lot of stress on the dollar. The dollar seems to be going up. It hasn't really gone to like an all-time high like we saw in Jan of 27 Jan 2022, but it's faring pretty stable right now in its range. So it's up 0.13. Nothing really major, but it seems to be in an upward trend. Now this is Bitcoin, and Bitcoin was down. Now this is a live view of Bitcoin. It's down almost 5%, and it's trending around the 35,000 mark. Now Bitcoin is seems to be mimicking how the market's progressing, and that's why we see such a big decline in Bitcoin, because it's trying to emulate the stock market. Now the low for Bitcoin right now is slated at 35,074, and on a current live view it is at 35,583. So it's not so far away from the low that we saw around the 22nd of Jan. We did see an intraday low on the 24th, so maybe it may trend there. That's where the rest of the stock market was. So Bitcoin's kind of trending a little higher compared to the stock market, because the all-time low that we, not all-time, but the last month's low that we saw on the 24th of Jan, Bitcoin seems to be a little like more stable in terms of like reaching that low as well. So yeah, that's just an update for you. Bitcoin 5% down as we speak and like trending lower. So more downside to come, I guess, on. Next is Ethereum, and Ethereum too is trending almost to the lows that we saw in Jan of 22nd of Jan, so just a month ago, and very close to like, kind of being on that. There could possibly be a bounce around this range that we see here. So it was kind of stable and then started trending higher. So that could possibly be another possibility where it may bounce back. But it'll also follow what the market's doing. So if the market's gone down 2% or 3%, the S&P 500 market, all these cryptocurrencies will follow that too. So just keep an eye on that while you decide on how you would like to trade them. Now next, let's look at the world indexes and see how they are performing. Some of them will give you a live view if it's live right now, and some would give you end of day views. So just keep that in mind. So this is the FTSE 100, and this is the live view for it. And on the current basis, it is down almost 1.83%. So that's a significant drop. And as you can tell, like it's also below the 50-period moving average line. It still hasn't touched the 200-period moving average line. So still, like, it's still right now in no man's land, and what that could possibly mean is that it could start heading lower. Now a small respite for it on the FTSE 100 is that the all-time low is around the 7235, so there's still some room for it to hover and maybe recover from there, but it's all the markets will follow in unison. So let's see how the other markets are performing. The DAX did recover a little bit yesterday, but it's still kind of lower for the day at minus 0.42. So still nothing significant, but I think it's trying to recover from the previous big drop that it had. So still very similar to the other downsides that we've seen. It's below the 200-period moving average line. Now this is the CAC 40, and just another Europe index that we do follow, and it's gone below the 200-period moving average line. So again, another weak market. So that proves that all the indexes are also in the decline. Another interesting article that I saw was that 1/3 of all the stocks that are part of the NYSE, which is the New York Stock Exchange, are in a correction, and that's really bad news. So it's gone off the days where we would talk about these stocks are available at a discount, you should go ahead and buy it. So that's no longer the case anymore. Shorting the stocks would probably be a better option, but keep an eye on when the markets turn. Keep an eye on the Ukraine-Russia news when you're shorting the markets, because any corrections there would cause the markets to bounce back up if that's resolved, because then there is no more panic in the market, and the markets will react positively and strongly in the upward direction. Next, this is the Nifty 50, and this is the Indian index that we're looking at. And as you can tell, the Nifty 50 is or the Indian indexes have known to be one of the stablest during this downtrend because I think it seems to be like either the Indian stock market has not been that affected compared to Europe and compared to the US in terms of whatever is happening in Russia because they probably do not have a lot of investments in stake in terms of oil, in terms of resources that they plan on getting from there. So it seems to be fairly stable. Having said that, it's still below the 50 period moving average line. So it's not completely isolated from everything that's happening. It's still like, trending lower, very close to the 200 period moving average line. But in terms of like being range bound, yes, it doesn't seem to be making low lows all the time. This is the Seng index, and the Seng index is I believe it's a live view. Yes, it is a live view at minus 2.91%. So it's really crashed down since yesterday's close. So that's really big news. And what I believe it's going to do is going to go close to like the previous lows that we've seen here. So yeah, it seems to be like Asia's also heading down. Let's not just look at Seng by itself, but let's look at the Nikkei and see how that's performing. So this is the South Korean index, and the Nikkei too is like moving down really strong. It's gone down to the lowest that it has been, and it's also crossed below the 200 period, below the 50 period. So it's again in the bear territory. Which is actually a really bad sign. And as you can see, there's a lot of gap downs from the last 3 trades, and it's just heading lower. So that's really scary, bad news for what the outcome or like the forecast is for the market. And so this is the Kospi, and this is the South Korean index. The other one was the Japanese index. My bad. So the South Korean index, the Kospi, is also heading lower. Again, a big gap down. So to summarize all the indexes that we've seen so far, it's all heading towards a bear territory, and it seems to be that there is more downside in store for it, with it almost touching the previous low that we've seen around the 24th or the 25th or 26th of Jan, and that seems to be the direction that is headed in. So there's 2 options that you could do: either short until it kind of heads towards that 24th Jan level. And once it heads to the 24th Jan level, like just stay away to get a confirmation of where the market's heading from there. And if the market's heading down further, maybe it's time to, start shorting more heavily to kind of make some money out of the market too, and not just be on the sidelines. But be cautious because the markets tend to move down fast, then it goes up. So you might tend to get caught into big changes in the upward direction when people are trying to buy lows and things like that. So just be a little cautious and be close to your trading screens when you're doing so. Okay, so now let's look at the top worst performance for the day, because everything was down. There's really rarely ever a green on my screen in front of me. So as you can tell, the worst performers seems to be like Apple, Tesla. You can see Tesla on the top with a -7% for the day, and I believe in the post market it's gone down further as well. So really bad red day for the market. In terms of like the greens, we've seen the energy sector on your right hand side. It had some hope, and that's where I was advising that energy could be a good respite if you want to go long and hedge your positions with some shorts as well, so that you can try to recover your positions as well. Now, if any one of you do not know how to short the market, do type something into the comments and I will show you how to do it. I'll kind of guide you through the process of learning how to short a stock and how to make money while the market's falling around you as well. So that's it, folks. That's all I had for you today. The market's really choppy, so be careful if you're trading. Go short the market if you can. This is a good time to make some quick money, but be careful. If you would like, you could also short some of the worst performers for the day. So find the lowest performer, and right now everything's performing badly, so take your pick. I do not want to spend too much time into telling you which one, because everything's red right now. So whatever you go in, if you short, you'll probably end up making money with it. but keep some good stop losses. As soon as you make a profit, start closing positions or keep your stop loss at your position level so that you don't have a lot of whiplash where you could then again lose money as well. So with that, I hope you enjoyed this. I did not carry forward with a lot of additional information on things that may not be relevant for this video, with everything available at a discount. So I do not want to spend too much time talking about it, but maybe when it's more relevant, I'll keep to the same agenda that we had and we can talk more about that. So with that, thank you so much, and more to come. I will be posting videos every day, and I'll also kind of come up with some good unique contents to keep it more current with whatever is happening around the world as we go by. So with that, thank you, and see you on the other side.